Today is the most important day of the week, because today we have CPI data, United States, inflation, United States. This is going to be a big one because it's the first time in a very, very long time that the expectation is that inflation went up. So we are definitely getting some volatility for Bitcoin. I'm going to show you exactly what trades I am looking at right now. If you like the content, please do me a favor, like, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends if you think this is useful. Also feel free to follow me on Twitter and Instagram. Those links are also in the description. Without further ado, let's start diving in. Okay, so this is the chart for BTC. Before I'm going to show you what I will be trading, first let's quickly move over to the CPI data. We had the previous one 3%, and now the consensus is that we most likely go a little bit higher, 3.3%. And the reason why we are going higher is most likely because of oil. You see here the oil price on the daily chart, and from the end of June until where we are right now, you see that oil is rising more than 24%, coming off $67, $68 all the way up to almost $84. And oil is part of the calculation of inflation and CPI, and therefore the general consensus that might be a little bit higher. If we hit exactly 3.3%, I do not expect such a major move. If it is lower or higher, that is the moment where it's getting interesting, and then we will see a big move. All right, let's go here to BTC. This is on the 1 hour. Before I'm going to show you my trades, I just want to show you and make you aware that we have changed market structure on the 1 hour and below. So if we are taking, let's say we're taking any point here in the chart, then you can see that we had a high, a low, and I will also change the color in a second, a lower high, lower low, and then here suddenly we created that much higher high, a higher low, and now all of a sudden we had again a lower high and a lower low. So therefore market structure has changed, bearish, and we probably need to expect to go lower. To be honest, I do not am so concerned at all, because like I said, it's only in 1 hour and lower, so it doesn't look that bad. But if we are going higher, that would make a lot of sense. What would I be looking for if we're going higher? To be honest, to first go lower so that I can enter my long position. And the reason why is because we haven't touched the golden pocket measured here from that low that we put in all the way here to the high, and then now towards the golden pocket. That would right away give on certain time frames a bullish divergence, and I will definitely trade that if I see it. If I zoom into the 15 minute, then it's a little bit more clear. This actually would be super nice and very juicy if we can have a continuation on a momentum waves going higher, something like this, and that also the money flow is curving more towards the upside, and just a quick move to the downside touching that golden pocket. I will definitely play the long, and then I'm aiming for at least the top of these candles. We need to of course be a little bit conservative that we do take profit. So then I would say, you know what, maybe first take this high right here that is at 30,100, and then this high right here. But to be honest guys, I think if we are going to break this high, we're going to take this one and all the other ones. These yellow lines, if we put them in yesterday, those are the significant highs, or the peaks, the spikes. And I already said yesterday, no effing way that I believe that this is a significant high, and we are going to leave these four tops so close to each other, leave them behind before we are going lower for the next couple of weeks or months. I just do not believe it. And look at that, the space is only 0.6%. It's unbelievable. And above we also have the golden pocket. So it would be super nice if we are able to maybe touch that golden pocket, create that bullish divergence, go all the way up towards that golden pocket, just take out all of those highs, take that liquidity, liquidate all those short trades, and then to go lower. Okay, so far so good. Do I also have a short trade for you? Yeah, the bigger short trade that I have for you is also right away this one. Let's say we are going higher from here, and we are not going to touch that golden pocket first, and we are going towards this golden pocket, or just take out these highs and then go lower. Look what we have. On the 1 hour we could have a very nice bearish divergence, and I said yesterday I want to see at least on the 1 hour, preferably also higher time frames, but the 1 hour is fine for me, a bearish divergence on the 1 hour for me to enter my swing short trade. And this could be it. When the data have been released and we are pumping higher, that could be the moment when we are creating that bigger bearish divergence on the 1 hour, and then eventually are getting a bigger move to the downside. Again, liquidate all those levels and then go lower. That would be perfect. One more other scenario that I have for you. So now I have a bigger long and a bigger short trade for you. Let's say that we again are going to leave that high above us. Then you can say, you know what, I might go try to trade it from this high to this low and then back to the golden pocket or the 78.6. This is a tricky trade, so please be careful, like I said, because we have all of those highs so close to each other, all of those levels. It is very easy for a will to then just push the price higher. So you need to have some more confirmations. What could that be? For example, bearish CVD on Coinalyze. So if you go to Coinalyze, you look at CVD and open interest. Once you see bearish CVD, you see bearish absorption. That could be a nice sign that we are topping out, and then you could play the short trade. If I'm zooming out, then of course the little bit of a bearish news that I have for you today is that we broke the value area low again here at the bottom, but so far not really a strong follow through. This is really becoming its own trading range, and the bigger the range or the longer it holds and we don't see a significant breakout, the more you need to respect it, that it is a trading range on itself. And we are in there already now since the 24th of July, so it's getting relatively long. So therefore we need to respect this with the highs and the lows, and that maybe the value area low from this range is slowly becoming a little bit less relevant, like I said, because we are creating the trading range. If we stay here for longer, then you can see we are building up value in that area. And what does the volume profile shows? It shows us where 70% of the most traded volume is between the value area high and value area low. That is 70% of the entire trading area. But if we are staying here for a very long time, guess what? That value area low will go lower, and the value area high will then also go lower to then create a new area of 70%. And therefore I'm saying, you know, the longer we stay here, the more we need to respect this price level in this area. That is not just a fake out or a retail trap, or however you want to call it, that we might stay here for a while. I hope not, of course, because I'm still really eyeing for that golden pocket at 30,600, 30,700. But this right now are the trades that I will be looking out for. This, by the way, the top here was the 78.6 on the fib retracement. Congratulations if you took it. I actually really thought we were going to pump higher yesterday, but so far we had a small retracement, nothing too significant. I think the bigger parties, the market makers, they are waiting for today. Last but not least, inflation data comes 1 hour before New York open, which is great. That means we have volatility on the release of the data, then volatility on the open of New York, and then the first few trading hours of New York. I usually like that a lot, way better than when we have FOMC, because that's always a few hours after New York open. And then you see that the whole day is just very quiet until then, the last 2 hours, which is a little bit boring. So I like it that the CPI data now comes just really on time, and we can trade all of that volatility. Please be careful. Same advice as yesterday. Once you're in a trade, once it's in profit, move that stop loss. Make sure your stop loss is entry. Make sure your stop loss is at least a little bit of profit to cover the fees. And just let it ride out, because today might give us a big move to the upside, to the downside. Stay safe. Do me a favor. Like, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment. Share this video with your friends if you think this is useful. And see you guys very soon again in the next one. Bye bye.